Savvy business owners earn 100% to 500% by using safe, positive leverage. In this educational video episode, I'm going to explain and answer a question that I've been asked numerous times: how savvy business owners or even real estate investors maintain liquidity, safety, and earn predictable rates of return tax-free on their money, but they also earn 100 to 500% rates of return. You may be going, yeah, right? Put on your seatbelt, I'll explain. So I'm Doug Andrew. I've been a financial strategist and retirement planning specialist and a business owner and real estate investor for 5 decades now. I've been helping a lot of business owners and a lot of people who invest in real estate optimize their assets and do very well with what they do. But I gave them some insights into opportunities where they could make 100 to 500% rates of return, and they went, oh my heavens. I thought I knew how money works until I met you. So let's talk about some basics first, and then I'll talk about how money works and how they've been able to earn, or what I call double dip, on their assets. So if we're talking about a business owner or a real estate investor, a lot of business owners know that they can make 100%, even 200, 300, 400, 500% on what they invest in their business. And they say, Doug, I already know how to do that. Now, some businesses don't, but some do. Others, they go, well, I'm a real estate investor. And yes, I've been able to double my money when I buy a property, and it appreciates at an average of 7.2%. Which is pretty common. And so they buy a rental property for $1 million, and 10 years later, or 7.2 years later, if it's appreciated at 10%, they sell it for twice what they paid it for. Say, that's 100% return. Well, yeah, but no, it takes 10 years, or it takes 7.2 years to double your money. So that's okay. But a lot of times they're only using half of the strategy that they thought was good, because nobody taught them about really how to leverage safely. Now, there are 3 marvels or miracles of wealth accumulation that I discuss in my various books that I've written. I've been blessed in my life to have authored 13 books so far. I want to gift you a copy of a 300-page book at the end of this episode, so stay with me. But when people understand these 3 marvels or miracles, they go, oh my heck, I thought I understood them. The first miracle or marvel is compound interest. And sometimes people think, oh, I understand compound interest. I go, oh, really? I usually give them a sheet of paper, a copy paper, that is 26-pound copy paper. And I'll say, okay, let's see how well you understand compound interest. Fold that in half. Now fold it in half again. Now, they folded the sheet of paper in half twice. I say, now imagine if you could fold that in half 48 more times, a total of 50 times. You can't physically do that because of the folds. But imagine if you could. I want you to write down how thick you think that would be. And these are CPAs and tax attorneys who say, I understand compound interest. And they write down a half an inch, 3/4 of an inch, 6 inches. Some even say a mile. And they get laughed out of the room when I'm teaching advanced continuing education to CPAs and tax attorneys. I go, I thought you understood compound interest. What is this sheet of paper doing every time you fold it in half? It's doubling. Double, 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 double. So then I show them mathematically, if a sheet of copy paper, which is 5/1000ths of an inch thick, were to be doubled 50 times, it would be from here to the sun. It would be 93 million miles thick. Double, double, double. If you could fold it over one more time, 51 times, it'd be from here to the sun and back. If you folded it over 42 times, it'd be from here to the moon. And, they said, oh, it'd be a mile high, and they got laughed out of the room. They were writing down 6 inches, and they thought they understood compound interest. Now, See, compound interest is what Albert Einstein said was the eighth wonder of the world. Well, Rothschild is the one that said, no, compound interest tax-free is the eighth wonder of the world, because a dollar doubling every period for 20 periods will be worth $1,048,000 if it's tax-free. If it's taxed as earned, the way most Americans save, a dollar doubles to $2 and you pay tax at 25% rate, you only have $1.75. $1.75 doubles to $3.50, you pay tax at 25% on that. Guess what you'll have instead of $1 million? You'll have only $72,000. In a 33% bracket, you'll only have $27,000 instead of $1 million. So Rothschild said tax-free compounding is the eighth wonder of the world. That's the second marvel of wealth accumulation, is compounding tax-free. The third marvel is safe, positive leverage. Now, leverage without liquidity is stupidity. That's why I always keep my business working capital or my real estate equity safely tucked over in insurance contracts, laser funds, compounding, okay? Because the real estate property or the business is going to do whatever it does, regardless of whether I'm putting my cash in there or using OPM, other people's money that I borrow from the bank, so to speak. So far, so good. Now, what's leverage? Leverage is the ability to own and control assets with very little or none of your money tied up or at risk in that asset, okay? So if you paid cash for a $500,000 piece of real estate, and you say, I doubled my money, I'm not impressed until I know what? How long you held on to it. Because if you paid $500,000 cash and you sold it for $1 million, and it took you 10 years, 10 into the rule of 72, you only got an average of 7.2% compounded annual rate of return. That's not that impressive. But if you used $500,000 of OPM, or you only put $100,000 down and you borrowed the other $400,000, okay, now it's a different story. Because that's still going to double to $1 million, but you only tied up $100,000. And so you look at the rate of return based on your investment of $100,000, and people say, well, what about the $400,000? That's not free. Wait a minute here. How do banks and credit unions make their money? They make millions and billions with OPM by paying interest. Some people think paying interest is an expense. No. If banks and credit unions did not pay interest, they would wither up and die. If you borrow at 6% deductible interest for that piece of real estate, in a 33% bracket, it's costing you 4. Every $1 million you borrow at 6% tax deductible interest in a 33% bracket is costing you 4. So that's a net of 40,000. You pay 40,000 a year, okay? Now, you pay 40,000, money inside of my laser funds have been averaging 10, 11, let's just say 8. So on $1 million over in the laser fund, I keep my money over there earning 8. How much more is 8 than 4? Don't say 4, it's 100% more. It's 80,000. So many times when I leverage, I am paying 40,000. Why? Because I'm making 80,000 on that money. And so I make 80, it costs me 40. Would you hire an employee for 40 that made you an extra 80? Would you buy a widget machine for 40,000 that made you an extra 80,000? That's 100% rate of return on employment costs or equipment costs. Are you starting to get it? But there are times when I have borrowed money at 3% tax deductible, net cost of 2. And in my indexed universal life, I have earned 11, netting 10 tax-free. How much more is 10 than 2? 500%. On $1 million on real estate properties, I've been paying $20,000 a year in interest and making $100,000. How much more is $100,000 than $20,000? It's 500%. It's 5 times. The real estate is going to double from $500,000 to $1 million. $1 million piece of real estate is going to double to $2 million, whether it's mortgaged to the hilt or free and clear. But while that's doing what it's doing, I can make money. I can make 100 to 500% rates of return on top of whatever it appreciates to, or whatever the cash flow is generating. Is this making sense? Same thing for a business. Many business owners will use OPM, and they will borrow money at 2, 3, 4%, and they will make 8, 9, 10, 20, 30, 40, 50% in their business. But many savvy business owners will use max funded indexed universal life as a repository for their working capital. I'll end with a story here. I have a very savvy business owner whose business is real estate. And so he will buy big apartment complexes, fix them up and flip them. He doesn't like to keep owning them. And so he, in 2017, he wanted to buy this multi-million-dollar apartment complex. And he called up and he said, Doug, I want to borrow, not withdraw, borrow $1 million out of my IUL policy to tie up this piece of property with an earnest money. And he asked for the form. It's one-page form, his name, policy number. He doesn't have to qualify for the loan. It's his money. The insurance company said, you want to withdraw or borrow? Well, borrow. Which way? And he goes, indexing. So he borrowed $1 million. They charged him in 2017 5% on that $1 million loan. He didn't have to write out a check. Okay. It's a sort of like a phantom loan. It's collateralized by his money and his policy. They charged him $50,000, which was deducted from what he earned on the $1 million that he left in the policy that he borrowed against. He earned that year 25% on his IUL. 250 grand is what he made tax-free minus the 50,000. He netted 20% or 200,000 tax-free on his $1 million in his policy while he was using $1 million from his policy, so to speak, to make $3 million in his real estate. This is what savvy business owners and real estate investors do. They use max funded IUL like I do as a working capital account to be able to make 100%, 200%, even 500% rates of return on top of whatever the real estate or the business is also generating. If this is giving you insights, folks, you need to study more. Claim your free copy of the Laser Fund. Go to laserfund.com and you contribute a nominal amount towards the shipping and handling. You have to have some skin in the game. I'll cover the rest of the shipping cost. I'll pay for the book and I'll send out a copy to you. There's 300 pages here of charts, graphs, and explanations and 62 actual stories of how the Laser Fund is used by real estate investors, business owners, people for retirement, college funding. But this is about you and your brighter future. And check out in there, there's educational webinars we teach. You can even schedule an appointment with an IUL specialist to show you how a Laser Fund can be designed for what your goals are in your particular set of circumstances, because this is about you and your brighter future. I don't want you to miss out.